Hey guys, what's going on? Quick video today on press converts, ATM, and I'm going to talk about strike per usual, but I'm going to talk about strike with regards to how it's behaving and the volume in the market. So, not really a sales pitch on strike like I do most times, but more so a just discussion of where we're at. So, first, I wanted to go over kind of generally the difference between press converts, ATM, and three different reasons why they're demanded in the market. So, ATM is a demand for the equity of the issuing corporation, and pre ETFs and in different jurisdictions around the world, that equity is in demand because maybe investors don't have access to Bitcoin or Bitcoin securitized products. Now, there's also yield expectations, growth expectations, there's lending advantages, and all kinds of other reasons why the equity may be in demand, and there's also speculation. With converts, there's a free call option on the assets, the future assets of the corporation, or the common equity, which is a vehicle representing Bitcoin yield or sentiment, depending on how you look at it. And the converts are extremely attractive to convertible hedgers who use a combination of delta hedging and then gamma trading to make money both specifically on the way down. These converts have priority claim over the assets of a Bitcoin Treasury company in the case of liquidation. So they're largely superior to the common equity, especially considering that the terms of offered by many converts for strategy and other Bitcoin treasury companies have very favorable terms for those convertible note holders, and they actually capture 70 or 80% of the upside of the equity with very, very, very little downside risk if you believe in Bitcoin. Preferreds sit junior to the converts in a capital stack, and they offer coupon payments and a liquidation claim over a Bitcoin Treasury corporation's assets. They're junior to the converts, but they're more advantageous to common stockholders. So let's talk delta hedging or gamma trading. Delta hedging is something that you can do to a convertible note. A convertible note behaves much like a long call option. So there's delta, and delta represents the price sensitivity of the convertible note to changes in the underlying asset. In this case, that's MSTR, the common equity. When these convertible notes are issued, they're roughly a 50 delta instrument, and one way to make money is by a process called gamma trading. That's not the only way that delta hedgers or convertible arbitrators make money. There may be dislocations in implied volatility or mispricings in the bond itself that they can capture with different options plays. But specifically, gamma trading is the way by which they short the stock and make money on the way down. They're selling high and buying low, and they're able to do that in a risk-free manner with the change of gamma of the convert. So they'll go short the equivalent delta of the bond or the sensitivity to the underlying MSTR. They'll go short spot MSTR shares. When the price of MSTR falls, they'll then buy back their short for a profit. You may ask, why is this any different than just going short? Well, they're always hedged, so they don't have directional exposure on MSTR. They're able to use the change in gamma, which is the derivative of delta, to capture movements down in the stock in a risk-free manner, which they capture in a short position that they then close out at lower prices. This makes them a small amount of profit. They'll rinse and repeat as the price of MSTR increases. They'll short more of the equity up to whatever delta the convert is and then make money on the way down. That's gamma trading, one of the many ways in which delta hedgers can make money in the market. Bitcoin treasury companies tend to use two different types of convertible notes, and that's secured and unsecured. Strategy and Metaplanet use unsecured convertible notes, which is kind of the industry standard. Unsecured means there's no margin call or liquidation price for these convertible notes, which is very important when it comes to issuing these products. If there is a liquidation price, then it's very difficult to have a truly creditworthy company. So Naka, for example, uses secured convertible notes, and I'm not sure the exact terms of the note, but they are secured by 2x Bitcoin collateral. So there is a provision in a secured convertible note where if the collateral posted for the convert falls below a certain threshold, the issuing corporation will have to top up on their collateral, or in a terrible scenario, they may be margin called and the assets of the corporation can be claimed by the debt holders. That's the difference between a secured convert and an unsecured convert. For the highly volatile Bitcoin market, you want unsecured debt such that you can't be margin called in the case of an extended period of drawdown. This slide's familiar to many strategy investors, and it just shows strategy capital structure. Now, I wanted to get a sense of if Bitcoin goes to 150K and strategy in demand continues to tick up for the preferreds, which we haven't seen that much demand for yet. How much Bitcoin yield can they generate for their common equity? And you can see there's plenty of room to reach that 30% debt ratio threshold, and they're obviously not there. Assuming the converts don't convert, what kind of yield will issuing prefs up to the 30% threshold create for shareholders? Now, it's easy to look at this and say, oh, they can issue X number of billions up to the 30% threshold, but the Bitcoin price will increase, their assets will increase, but then also all of the prefs that are issued are then used to purchase Bitcoin, which increases the collateral stack. So all of these products work together and compound the amount of Bitcoin backed collateral on Strategy's balance sheet. There's a feedback multiplier when you issue preferreds and use the proceeds to purchase Bitcoin, which then adds more collateral to the balance sheet. If Strategy were to issue preferreds up to their 30% debt threshold, with Bitcoin moving from 100K to 150K price, they'd be able to yield about 27% Bitcoin yield per share. And that's a pretty large number. And that's something which I think is possible within a year's time. So my mental target is somewhere upwards of 20% annualized Bitcoin yield for the foreseeable future. Their forward guidance has been above 15% annualized Bitcoin yield, but I think they can hit 25% for the next 3 or 4 years as the demand for the prefs continue to increase and as their collateral continues to grow. So there's nothing in my mind that says we can't hit a 25% Bitcoin yield over the next year with a growing demand of prefs, and we're already at 16% annualized Bitcoin yield. So things look pretty good for a sustained, durable, double-digit Bitcoin yield into the future, which is exactly what you want to see as a common equity holder. Now, talking Strike and Stripe volume and ATM usage, this chart shows the Strike and Stripe volume, the Strike ATM, the Stripe ATM, and the percent of the weekly volume that's used as the ATM. You can see these numbers are quite massive. 14%, 48%, 43%, 35%. So what Strategy is able to do is issue massive amounts of preferred equity relative to its volume because they're self-healing products. So with a case like MetaPlanet, they'll be able to issue large amounts, massive amounts of preferreds into the Japanese market if there is a demand for high yields, which it seems very, very likely there is. They won't even have to have an extremely liquid preferred to issue, again, massive amounts of yielding products into the market. So I think this is super bullish for the Japanese market preferred. They'll be able to get these things out the door very, very quickly once they have an ATM on it. And we've seen that Strike is only appreciated in value. Same with Strife. So issuing massive amounts of ATM relative to the volume seems to be totally acceptable with a preferred equity. This chart here shows the weekly Strike volume and the ATM on those specific weeks. So they've clearly been managing the ATM based on the volume in a way that hasn't been harmful for the price, and the price continues to trend higher. I think Strife and Strike, again, are extremely undervalued relative to other preferred and just bonds in the market. MSTRI bit ratio, same as always, been locked in at about a 6. We'll see if that breaks to the upside. Everyone thinks it will. Some people don't. Now you can see the Strike volume has been flat. Strike volume has been flat. We saw that in our Strike volume table earlier. Price continues to trend upwards. Strike remains an underpriced product in Strategy's capital stack. Anyone owning spot MSTR should seriously consider owning Strike. I've said it before, I'll say it again. I just wanted to sum up Strike, difference between secured and unsecured debt in a short video for you all. Hopefully that's helpful. Hopefully people are excited about the different products that are being offered. Again, I love that trade. That's short the convertible portion of Strike and long the cash on cash yield of Strike itself. That's a great trade. I think anyone who wants to have non-directional MSTR exposure with a really high compound yield and income, that's a great trade to do. Strife remains undervalued, and Stride's volume is starting to tick up. The price is starting to tick up. So I think people are taking notice, but these things take a long time. It will take a massive amount of time. And there is definitely a dislocation because most Bitcoiners, people who like Bitcoin, aren't interested in fixed income yielding products. There's a very niche audience of people who would be interested in such products. Institutions, large money managers would be interested in a high yield fixed coupon. They obviously don't get it. They think it's a scam and a Ponzi. So things like this take time. It's exciting to see it shape up. a yielding product in Japan would be absolutely incredible. That's what we're all looking out for over the coming months. So thanks for watching. Talk to you guys soon.